Hey, thank you for joining me for another episode of Racking Up Rentals. This here is episode 212, which means show notes can be found at thoughtfulre.com/E212. Please take a second to make sure you are subscribed to this show, followed, plus whatever it looks like in your app so that you make sure you don't miss anything else, and you're letting the platforms know basically that you're listening, and that helps them spread the show, and I appreciate that very, very much. Onward with today's episode. So today's episode is really about me kind of sharing a little epiphany, I guess, of a reframe I had for myself in the last 12 months or so. I love epiphanies. I kind of live for epiphanies. I live for having them. I live for helping other people have them. I like to think of it as, there are topics that we look at from a certain angle, but we can look at exactly the same topic. And if we walk around it and see it from a different angle, it looks different to us. And to me, those epiphanies tend to just unlock possibility and make you kind of go, oh my gosh, oh my gosh, oh my gosh. I hadn't thought about it like that. And now you have new ideas and things you can go do. And it just unlocks a lot of action and possibility. So I love epiphanies, and I wanted to share this one with you. Now, this one, I'm kind of surprised it never really struck me in this way before, but it hadn't. And I thought that what a better time then right now, as I'm recording this, we are just about to get into a new year. So whenever you are listening to this is great. But if you're at a point of reflection right now and you're thinking about the future, as we tend to do around a new year, I think this is going to be an exceptionally relevant episode for you. So here's the full thought, and then we'll just kind of break it down simply. I realized recently that I've bought a lot of real estate in my life and in my career. And I would consider and call most of that real estate investment real estate. But despite having bought a lot of investment real estate, I realized that I've never actually invested in a piece of property. I've only ever invested in my ability to take that piece of property and make it a winner and make it a wealth builder. So to put it simply, I realize I've never invested in a property. I've only invested in my ability to do something with a property. So the investment has always been in me, not in the piece of real estate. And I started thinking about this and I thought, my gosh, this is not unique to me whatsoever. This is actually like a whole principle of what we're doing. And this is deserving of discussing and dissecting just a little bit. The property itself is not the investment. The property is the vehicle for the investment. It is the form factor of the investment. It is the embodiment of the investment. You might say it's the manifestation of the investment. It's how it takes shape in a tangible and literal and visual and whatnot basis, but it is not the investment itself. If you were to buy a property and expect the property to be the investment, you would think that this property has some of its own merits that make it increase itself in value and make it produce a return. And you could certainly buy a piece of property that is already producing a return, and you're buying that return, right? That might be like a cap rate, right? I'm buying a 7 cap property. I'm paying all cash for it, and I'm getting a 7% return. But the property, for those of us who are at the growth phase of our portfolios, that are being entrepreneurial as a way of growing our portfolios, the property itself is not the investment. The investment is in ourselves. It's in our ability to do lots of different things. It's in our ability to understand the opportunity that this property presents, the highest and best use. I've probably told you this before on an episode, but I remember a precise moment sitting in Power Players, the signature educational event of my coach, Greg Pinillo, for the first time. I've been there lots of times, but for the first time, I remember the moment he said, the entrepreneur sees what could be there, not what is there. And that has stuck with me on a daily basis for many years now. I think about almost 9 years now. I've been thinking about that idea over and over again. So we're investing in our ability to see something that isn't currently there, but could be there. The idea of highest and best use. That could mean simply, I understand what the zoning is. This thing is zoned for 10 units and it's got a house on it. Well, there's some opportunity there. It could be seeing what's not there in terms of a space that should be reallocated towards storage, or a basement that should be finished to have more livable square footage, or something like that that captures the full potential. So the investment is in our ability to know what could be there versus what is there. Our investment is our ability to train our eyes and ears and brain to see possibility that is not currently there. And that could mean studying the zoning code inside and out and reading it and knowing exactly what the ceiling height has to be in a basement to consider it livable square footage, and seeing that opportunity so that you're buying a 2-bedroom house, but you know you're going to make it into a 3-bedroom house because you're seeing the opportunity of another bedroom in the basement that is not currently there. That investment is in you and your vision, not in the property itself. The property will be the physical embodiment and the vehicle for you carrying out that vision, but the investment is in you specifically. The investment is in your ability to negotiate a deal structure with the seller that will facilitate what you want to do, right? Certain deal structures facilitate certain entrepreneurial plans and exit strategies a lot better than others, right? It's not usually going to be a great plan to buy a property, to negotiate a deal that has hard money for the purchase if you want to own this thing for 10 years. You know there's going to be another step to refinance that property. And if you're doing that intentionally, that's fine. But if you know you're going to hold this property for the long term and you can negotiate a deal structure that right out of the gate, right at acquisition, you've got a 15-year seller financing note that really facilitates the long-term hold, that deal structure, your ability to negotiate that, that's what you're investing in. It's going to manifest itself in the purchase of this property, in the dirt and the sticks and the bricks and the paperwork that comprises the deal. But the investment is not in the property. The investment is in you and your ability to make that happen. The investment is in your ability to execute that plan, your ability to gather the team members and the contractors and all of the experts, the engineer and the architect, or whatever it might be required for this particular project, but to execute your plan. Your investment is in your ability to not just have the vision for transforming this from what it is to what it could be, but to have the skills to execute the plan that transforms it from what it is to what it could be. The investment is in your ability then to see all of the opportunities to optimize or maximize maybe the net operating income, the NOI of the property, and to market the product in a way that captures all of that opportunity. That's what is the investment is in you and your ability to take this thing and turn it from what it is into what it could be. Think of the property as being like the canvas upon which you are going to paint the art of your vision for this property. It's your painting the art that is the investment in what you're doing. The property is an important part of the equation. The property is the canvas, absolutely. But it's just the embodiment of the real investment, which is you and your ability to see what's possible and your ability to carry that out and to make it come to life. Now, the property itself and the qualities or attributes of that property are, of course, important. There are certain properties that are going to be a much better canvas than others that are going to be a lesser canvas, lower demand canvas, properties people don't necessarily want that badly to live in or to work in or to rent or to own or whatever. The beauty of the property, the curb appeal, the romance, all of those things are qualities of the canvas itself. But to think of the property as the investment itself is sort of like abdicating responsibility for this outcome. It's like saying, all I have to do is buy this property. I think it's a good investment, and I'm going to hope that this property turns out to be a good investment. But, hey, if it goes great, that's fine. If it doesn't, if it's a bad property, a bad investment because it's a bad property, that's not on me. The investment itself, the property, it's their fault. And that's abdicating responsibility. It's washing our hands of the responsibility of owning the fact that this investment is about us. We're investing in our ability to take a property and turn it into a winner. So my hope for you is that this is an empowering message overall, that the ball is in your hands. It's not can you be lucky enough to get your hands on a property that is a good investment. The question is, will you have the vision and the skills to take a property that is a vehicle and turn it into a winner? And if you're willing to accept that responsibility, that's a very, very empowering thing, because now you realize it's not dependent on things outside your control. Like, can I get the right investment? It's dependent on your ability to go out and to make it happen in the vehicle of a piece of real estate. So what is really ultimately the takeaway with this? I think the ultimate takeaway is, if you are the investment and the property is just the vehicle for that investment to take shape and to take form, you are the investment. Invest in yourself. Invest in yourself. Invest in your ability to get better and better and better at seeing possibility where others don't see it, to get better and better and better at knowing what's possible in a particular zone and with certain building code, and what you can or can't do to a property. And could you carve off a flag lot? And if you did that, could you build another unit, or could you build a duplex on that flag lot? Could they both have accessory dwelling units? There's all of these different things. What would the market bear for rent here or there? If we were to add coin-op laundry here or there, would that be an attractive, marketable thing? It's a house. Maybe would it be best to simply have laundry machines? How would that affect the NOI of the property? Your ability to understand those things, to know your market like the back of your hand, an intimate feel, which, as a side note, is absolutely related to why I'm such a fan and a believer in local investing, because it's really hard to have a back of the, to know a market that you don't see in person every day, like the back of your hand. Invest in your ability to learn how to approach the seller and to put yourself in front of the right seller so you can negotiate not only the right price and the right terms, but the right deal structure that facilitates your plan. Investing in your ability to know how to structure deals in different ways and to get financing in different ways. Investing in your ability to know how to work with contractors and different vendors and property managers and all of that. Invest in yourself, because you are the investment. Because anything that happens with the property is simply going to be the things that you decide to do with that property. So the first domino is making sure that you are the one who is invested in, and just knowing that the property is how it's going to take shape, but the property is not the investment. You are the investment yourself. That is it for today's episode of Racking Up Rentals. So again, show notes for this one can be found at thoughtfulre.com/E212. As I mentioned, please make sure you've subscribed and followed this podcast. But even more important, if you would be so kind as to take just a second to give us a rating and a review. If you feel like we've done a 5-star job, oh my gosh, I would be so appreciative of that. Write a sentence or two, just letting people know what you think about this show. I see every single one of those, and they really they mean the world to me. Doing a podcast is a little bit lonely. You're kind of talking to a microphone or to a camera, as I'm now doing, by yourself, but there's not a ton of interaction. It's really rewarding to know people are listening, and just a quick rating review helps the show so much. Thank you for doing that. We have a Facebook group, if you didn't know it as well, for us thoughtful real estate entrepreneurs, rental portfolio wealth builders. You can just search that, a little bit long name, but search it in Facebook, or just type group.thoughtfulre.com into your browser. And we have programmed the internet to take you right to that page in Facebook. I will see you in the next episode next Thursday. Thank you for being here. Until then, this is Jeff from the Thoughtful Real Estate Entrepreneur signing off.